Hey everybody, welcome back. Matthew Pillmore here, president of VIP Financial Education. Thank you so much for checking out our channel. Want to come at you today with a quick credit hack. Guys, I was talking to somebody this morning that saw a 50-point reduction of their credit scores recently because they saw their balances increase as a result of recently moving from one home to a brand new home. They spent almost $30,000 on furniture for that new property. It's a lot. Now, they can afford it. They're very well off. However, that 50-point credit scoring reduction is something that we have to remedy. So the recommended solution for that was to begin paying before the statement closing deadline. Now there are two dates on the statement that are very, very important to you. The first is the due date. The second deadline on the statement that's very important to you is the statement closing deadline. The statement closing deadline, most people are unaware of how that impacts them and their general borrowing strength, their credit worthiness. When you are paying your balances before the due date, the balance that reports to the credit bureaus is generally one of the highest balances that you have on that credit account for that month, because they, in almost every case, will report to TransUnion, Equifax, and Experian on or around the statement closing deadline, which is the date that the last transaction is added to that month's billing cycle before they issue you an invoice. If you can pay before the statement closing deadline by a number of days, in most cases you can beat their reporting to the credit bureaus, therefore seeing a much lower balance each month being reported to the credit agencies, therefore having a 30% impact on your credit scores. If you want the best credit possible, you've got to demonstrate the lowest balances relative to the amounts that are available to you, therefore reducing that utilization ratio at every opportunity you get. As you know, credit influences your ability to get capital. Capital influences your ability to increase cash flow. So guys, if you want more great tips for how to maximize your credit, make sure you check out all the videos on this channel. If you want us to continue to create on this topic, make sure you hit that like button. I want to hear your stories as well. So if you have any experiences yourself of how your credit scores have been affected by how your balances were being reported, please make sure you comment below. We look forward to seeing you on the next video. Until that one, make it a great day and take care. So I realize that some of you have not gotten one of the single most popular budgeting tools available, not to mention it's free, and that is called the Cash Flow Cruncher. So what I want to do today is walk you through the process of downloading your very own copy. It comes in the form of an Excel spreadsheet, so it's very easy to use, and it's quick to navigate. So let's go ahead and walk through that process together. The first thing you'll do is in their search menu, you'll go to cashflowcruncher.com, which will take you to the download page. Simply type your email address into the field to claim your free copy and go ahead and select the red button. Immediately it'll pull up the download button, which will open a new Cash Flow Cruncher spreadsheet. Now you can see I've already got a copy open and enlarged here for you to see. The first page it'll open is the Cash Flow Summary tab, which is a non-editable page. It's very important to understand that this opening tab will not require you to put any information into these fields. This actually imports the data from the other tabs below. Now, if you've ever used an Excel spreadsheet, you'll navigate the spreadsheet by going to individual pages down here. And it'll start with the Revenue and Assets page. On this page, you'll want to itemize each individual income that you bring into the household or the business. Now, it's always been my recommendation that you create an individual cash flow cruncher for your businesses, an individual cash flow cruncher for your real estate, and an individual cash flow cruncher for your household.